Hello traders, watch this video to the end and you will never find it difficult to identify where an institutional inducement trap is or where the liquidity is resting. When I identify this secret, it has helped me change my style of trading and increase my profitability levels. So watch this video to the end to learn the secret behind an inducement and also a liquidity. As a trader, if you want to literally be a profitable trader, this is the secret that you need to learn. You need to know where the liquidity is resting and also know where an inducement is resting, where manipulations is likely to happen, and where price is likely to go and take the liquidity, either being above or below a particular structure. So in today's video, I'm going to show you how you can literally identify this and add it to your trading style that will literally improve your trading uh, your trading journey for you to turn all your some of your losses to a profitable trade. Some losses that you take in the market, they are just a trap that you are not able to identify. Price will come and hit you out the market and later moved in your favor. So let's use this inducement to identify where this trap and when this trap is what is likely to happen. So watch this video to the end, and if you find this video helpful, don't forget to give me a like button and don't forget to click the like button. Also leave your thoughts in the comment section. I'll respond to ever comment that you put, right? So I'll show you in a diagram before we come to the live market. I'll show you a diagram. Let me show you in a diagram so you can literally find it very easy to identify it whenever you open your live market. And this particular strategy, let me just call it a strategy or a style. It is applied in all the market, either being gold, GPUSD, Euro USD, Bitcoin, anything that presents the chart, it applies all because there are institutions that move all this market and there are money involved and they manipulate people to make sure that their positions go on well, right? So I'll show you an example on a diagram before we come to the live chart. So let's go to the diagram. These are the diagrams that you need to study very well because these are some of the things that you find on the live market, right? So in this diagram, we have three diagrams here. We have this, the first, the second, and then we have a third diagram. So if you look at the first diagram, you can literally see that we have a bullish candles. In this case, we have a consistent bullish candles, right? So in the first candle and then the second candle, you can literally see that the second candle has taken the low of the first candle. It has taken the liquidity beneath the first candle. So if sweeping this liquidity literally make this level to be an inducement level. So that's the price pushes below to take the liquidity. That gives you a what? That gives you a pullback. So this is a retracement. This particular way you see here, taking the low of this is a retracement before we have price to shoot to an upside. So that makes here to be an inducement. So if this is the last pullback that happens before a retracement is happening, then that is going to be your what? Your inducement level. For instance, if price moved to an upside and move back again and later shoot to an upside. So you can literally see that this is the last one. This particular level that you are seeing here is the last pullback before we have this structure breaking to an upside. So before we get this break of structure, this was the last pullback. And that particular pullback here is the inducement. This one here, that is the inducement leg. So we're expecting price to move beneath back to take off the inducement before moving. To take off the inducement, that means there are liquidity resting beneath this particular level here. So hence, price will now come to pick that or that liquidity before shooting to an upside. And this is the inducement. So in this case, you can literally see this candle example that I've shown here. You may not see it in a clear structure as we have in the diagram, but you may see it in the candlestick form as you can see here. So here, that you take as what? As an inducement leg, because price will later retrace to take the liquidity beneath there. And the second diagram, you can literally see that this, we have three candles here: the bullish, the bearish, and then another bullish to an upside. So this is the type of movement that most traders call rally base rally. You can see that. So this is the type of candlestick structure that is named as a rally based rally. So since it's a rally based rally, traders takes this to be what? To be another block. This particular candle here to be another block. So if this particular pattern this candle pattern forms before leading to a structure break and a retracement coming down, that is going to be our inducement leg, and hence liquidity is going to be resting beneath this particular low here, beneath the inducement here, and price is likely to come back to take that inducement before moving. So your expectation is to always look for price to come and take the inducement leg, sweep the liquidity beneath that, and you find any an institutional reference point beneath this inducement, so you can use it to take a trade. And the third diagram, you can literally see that it may not be either like the diagram 1 and the diagram 2, but then it can also look like the diagram 3. And this diagram 3 is what the most traders wants to be seeing, right? And they couldn't identify the diagram 1 and the diagram 2 because the diagram 1, the diagram 2 is more technical than the diagram 3. Not everybody can literally identify that the diagram 1 is also a pullback if price comes beneath to take the previous candle low or to take a previous candle high. It is also what? It is going to be it is also a retracement, but they always use this diagram 3 because it's a simple way that looks like the textbook structure. So hence price move higher, give us a retracement, and give us a continuation to an upside. So if it happens like this, you can literally see that traders will be using this order block. So if you mark this as an order block, right, here going to be another block. You are expecting price to come there because you take your trade. So later, price move beneath to clear the liquidity beneath there before pushing price higher. So hence, this is your inducement, and there are liquidity resting beneath this particular inducement, right? So it's the same thing that applies in the bearish market. In this particular case, there is a bullish market. So let's find an examples on the bearish market, and let's see how it literally works in the bearish market too as well. It's the same idea that is applied to the bearish market too as well. So as you can literally see that in the bearish market, you can see the first candle and then the second candle. The second candle has taken off the high of the first candle, right? So hence taking liquidity above that particular high before pushing price lower. So hence, if this one leads to the structure break or the last pullback before the retracement happen, then that's going to be what? That's going to be an inducement. They'll be expecting price to retrace back to take that level, tap into any institutional reference point. We have about, based on ICT, or according to ICT, we have about seven institutional reference point. I've discussed some of them in my early videos, so you can literally go and watch it out. That is breaker block. Breaker block is an institutional reference point, and I'll be doing more videos concerning this all seven institutional reference point, which you can leverage on it to take more profitable positions that will help you in to improve in your trading journey, right? So in the next one to as well, the second diagram, you can see we have this candle, the red candle, the green candle. That's going to be the last buying candle before the next bearish candle come, and that last buying candle is going to be an order block. So above that, that's going to be an inducement. So you seeing this to be an order block is the reason why it is called an inducement. Is the reason why it is called a trap, because you'll be using that zone as your entering level. So if price gets into that level, if you use this as your entering, then price gets into this level, then that's when you see price taking you out before moving into your desired direction. So that's how this thing happened, and these are all traps, right? These are all traps. So hence that is how you can identify an inducement in this case too as well. So the next diagram, which is the third diagram, you can literally see that price give us a what? An impulsive, a correction, and a what? And a continuation to the downside. In this case, it is not a perfect structure, which you can literally find it easy to identify. Unlike the first and the second, which is more technical. So here you can see we have a price buying and moving to a downside, selling give us a retracement and a continuations. We have an impulsive, a corrective, and a continuation to a downside. And then the high here, that's where the liquidity is resting, and that's where in this particular block, which is the order block, the last buying candle before the downward movement is the order block. So price gets into this with price coming into this and you using this as your level of interest, you are going to be induced there, and then liquidity is above there. So identify this correctly on your live market. So let's move to the live market to find more examples of this and how we can leverage on this in our next trading. So let's find a quick example on this live market, and this is gold chart, right? 5 minutes time frame. This literally applies in any time frame, either being the 5 minute, the 1 minute, 15 minute, 30, or 1 hour daily. All this happen because in this particular time frame, institutions are involved in this particular time frame. So hence they find levels to manipulate retail traders like us before they move. So immediately we also identify their tactics, then we'll have a more profitable trades. We'll always predict. Most times we'll have a right prediction because we are going to be trading with the in line with the institutions, right? So hence let's find an example. Let's make a quick one here, and this is going to be the bullish example. So in a bullish example, you can literally see that when price shoot to an up, start to move to an upside from here, price give this retracement, move higher, and then give this particular candle here, take below this one, so calm down, then move, give us another pause to the downside, which is this one, before shooting to give us this high, and then the retracement is happening around this level, right? So the last retracement before the last uh, pullback or retracement before this major retracement, that is the high, is the inducement, right? So it's the inducement. In this case, you can literally see that this particular leg here is an inducement. So finding this leg as an inducement here, we have this leg as an inducement. So an institutional reference point beneath this particular inducement, that is our level of entrance. That's our point of interest there, right? So hence this block here, we have another block resting here. The last one selling candle before that upward move is our other block. So hence this where you'll be taking a trade. So you can also see that when price shoot to an upside, when price take this and then started buying to an upside, this is the highest point that we have here, and this particular high we have here was taken by what? By a candle sweep. We have a sweep here. So when price sweep this particular level, so hence this high is now transferred to the new high. We now have this one as a transfer to this particular one here, right? So to this particular one, this is now going to be our new high, and the tracement that happened before this high is formed is this pause that we have here. This one that we have here, you can have it in a structured way. This is example in a structure form. So hence, this is also an inducement that you can literally identify. So, and you find your institutional reference point beneath that level to use as well as your entry. So in this case, you can use this order block too as well, right? You can also use the fair value gap, which is also an institutional reference point to take your trade. The next one too as well you can literally see this particular one here. Price shoot to an upside, give a retracement and a candlestick, sweep the previous candle low here, and then move to form this high. So after this high is formed, you can see that price trace back to take that one, that low where the candlestick is formed here. So this is also what this is also an inducement, right? So it's an inducement, and then price is coming to take that level. So in this particular case, we use what we call the scope entering model. I'll make a video about it, and then we use how you can take this trade. And this same thing is applied in the one in a bearish market, as you can literally see that in a bearish market, this or that's how it's what it's applied. In the first move, you can see price sell to the downside. After selling, it leave this level as an inducement. Price come back to come and take that inducement, tap into an order block before price selling to a downside. So we have another inducement that's also resting around this level here. You can see that, and then price comes to what price come to take that and tapping into an institutional reference point before continue selling. You can see that. So price moved, come back here, and also create here, give us the market structure, shift here, then sell down to to create this particular pulse here to take the previous candle high that makes it to be an inducement, retrace it back, take that liquidity, and then started moving. So this is how you can literally identify your inducement to avoid being trapped in the one in the market. So guys, if you found this video helpful, don't forget to give me a thumbs up and also leave your thoughts in the comment section. I'll respond to all your thoughts. I'm a Camilo FS, logging out.